Welcome to Taking Stock. It's Wednesday, the 19th of July, 2023. Ooh, it's an exciting day, isn't it, John?
Well, yes, it's another day.
No, it's not. This is, do you know what? I did say yesterday, and in fact, last night I tweeted, I did say, if CPI data, if inflation data comes in below expectations, I think the bottom of the market's behind us. I think it's the start of the end of the bear market. Of course, a bull market is determined from 20% off the bottom. We're nowhere near that yet on the AIM share, but it's looking good. Let me just share this with you. There we are. The FTSE 100 up 1.54%, FTSE 250 up almost 3%, FTSE 350 174, AIM all shading up 1.1%. It's feeling like, I did say this on Twitter as well, vaccine day back in November 2020 when the markets rose, all of everything, the tide just went up. And I do think this now, you can start to see a switch in liquidity. It'll become easier for micro caps, smaller caps to raise money. Liquidity will build slowly. The inflation figures aren't getting worse from here, don't you think?
I mean, I don't think they're going to get much worse, but I mean, I just think that the pace at which they will improve. This is one day. This is 1 month's news.
It's a time. It was a watershed day. It's the first time. I mean, just looking at, in fact, before you get into this, in fact, before we get into this, by all means, comment below. I had one comment yesterday I'm not quite happy with. And in fact, I'm getting it up. Who is it? Ian Wright. All right. Now, I don't know if it's the Ian Wright, but Ian Wright commented a dichotomy of views between Justin's rampy hopefuls and John's cautious quality strategy. A much better balance than Justin on his own. Ian, do you know what, mate? Just point out which one of my rampy hopefuls you're talking about. Give us some examples. And I'll go through fundamentally and technically why I think they're good. But having said that, I think I do see what he's saying. When I hold stock, I do feel quite passionate about it. That's why I buy stock in them. But I do look at all companies I look at on a fundamental and technical basis in the placing of an industry. But I think that'd be quite good for two different funds. Which one would you invest into? Justin's rampy hopefuls or John's cautious quality?
I think cautious quality's got to win every day over the long term. This is what I'm saying. This is why, obviously those inflation figures today are pretty good news. Although, I mean, if you look behind the numbers, if you look behind the headline figures, there's some real shocking numbers in there still. I mean, food and beverage inflation is still, 17% plus. What else is up? Alcohol, beverages and tobacco, horrendous for people that enjoy that sort of thing. Up 9%, although down 9.2%, but that's it's a 0.1% drop. So we are seeing some some of the sort of energy costs coming out the system, that sort of thing, in particular. But there's some horrendously rapidly rising prices here in many things that sort of underpin our economy. I just think whilst obviously the market looks at inflation and that has that mechanical effect, as I've talked about before, and the economy is not the stock market or vice versa, as we often say. There's still pain ahead. This is. I think I saw one commentator refer to this earlier as a glimmer, and I think we should be cautious not to get carried away.
I'm showing you the two-year bond. Okay, I mean, look at that. It did hit a previous high. It's 5.4. Estimates are now, in fact, the top British story we've got on here is basically interest rates are predicted to rise less sharply after the UK saw a surprise drop in inflation. Now, the thing is, you're right. There's a difference, and people always should look at the difference between the economy and the market. And I think people are getting these confused. And I did have a discussion yesterday on Twitter, and I said, listen, you don't understand. The market has priced this in. We've been falling for 18 months. It knows the recession's on the cards. It knows that. That's why a lot of stocks in the market are at all-time lows. The market is at, barring the COVID dip, the COVID crash, the AIM all share is at 2016 levels.
I think the
how bad a news are we going to get?
I actually think the market's become a lot more short-termist in what it's looking ahead to than it perhaps used to be and should be. we see the outlook upon which the market moves. It's been changing rapidly, and so if it was possible to price everything in, then we wouldn't have these periods of volatility.
Oh no, it can't be. It can't price it. That's how you make money on shares, because they're oversold. They get to the point where people just literally risk averse, herd mentality, sell everything, regardless of the valuation or the value inherent within these companies. People will sell in downturns. They get scared.
Yeah,
so that's why. But what I'm saying is now the market is seeing this. This is what I think is seeing. So it's getting less worse now. We are seeing figures getting less worse. That's all the market has to know. So essentially from here, it may take a while to come out of this, but the market, as we know, is like a year, 18 months ahead. So if you're looking forward like 18 months or a year ahead, will the figures be getting better? I think they'll be better than where we were going 6 months. And
it depends. But it depends whether we have a recession, and if so, what the severity of that recession is and the length of that recession. And we've been able to predict the length of the bear market that we've been in. We've, in fact, arguably, we've been in and out of a bear market, hopping around there. So I don't know. I just think it pays to be cautious.
No, it doesn't.
No.
Right now, the market, it pays to be brave.
The market. There's a very fine line between being brave and being foolish. I think that being brave is, and this is why I go back to the cautious quality. Being brave in a market like this is going, this is a good company, but it isn't going to rise for a while because the market conditions are pretty poor, because sentiment generally is pretty poor. So I'm looking at the chart. Look at one of the top risers on FTSE 100, Hargreaves Lansdown, up 7% today. Quality company, absolutely quality company. Come off quite a lot from its high. Shares almost got to 25 quid, and you can now get them for less than 10.
Yeah.
This is not going anywhere. This company, this is not going anywhere. When I say that, I mean it's not going to go out of business. It's not going to get eaten alive by its competition. I really don't think it will. The likes of AJ Bell, Interactive Investor. It's had a tough time because of that competitive threat. It's had a tough time because it needed to invest in its platform, but you buy this now. This is a high quality business. You get it on 12 times forecast earnings, and this is where I would say be brave with a company like this, where you've got some quality backing behind that investment.
I agree. I completely agree. I'm not saying be brave and that means throw all your money on any old nonsense, micro cap nonsense. No, I'm not saying that. I'm saying whenever I look at a company, first and foremost, if it's a loss-making company, how much cash they got? They got more than 12 months worth of operational cash. But I mean, with Hargreaves, I've looked at them several times. I put them to spreadsheet. I'm still not convinced now. I mean, even at the fall, they will rise because they're a market leader. I know that, but I mean, they're still not cheap. And I know you pay a premium for that sort of market-leading status. But like you said, in the last few years, the new entrants have come into the market, and it's happening all the time. Now, from a fundamental point of view, they're safe. Of course they are. But from a technical point of view, not convinced at all by this rally. I mean, because look at that. Previous highs have been up 9-10 quid. Now, until they start making out new highs, I wouldn't bother touching them. And then after that, maybe so. But that could easily fail towards that sort of 10 level and fall back down.
But just going back to this point about being brave. Look at the house builders, which have also spiked quite sharply today. Now, I'm not convinced that is a sector that you could describe as quality. So, this is a sector that is exposed to recessionary forces, perhaps even more so than someone like Hargreaves, which is a long-term business that generates its money rain or shine through the fees it charges. House builders are in a tough spot. We know that they're going to deliver fewer houses this year. We know that pressure on mortgage rates it's rising. That to get a deposit is becoming harder for first-time buyers who are retreating from the market. So you can say, let's be brave and buy a house builder because the rates terminal rates have come down a bit. But I would say that actually no, in this case that's foolish, because actually the recessionary pressures that are behind all this will impact this massively more. So I do think you have to basically I say you have to be discerning wherever you are in the market cycle.
Yeah, but hang on a second. If you look at house builders, for example, okay, I mean, they did have a nice sort of rally. You could say this was largely oversold. There's a Taylor Wimpey here, by the way, going down to sort of 90 pence a share. But what's going to happen now is that they said the headline number is that the Bank of England probably won't raise as aggressively or as high as previously thought. So people are now looking at mortgages going forward. And you obviously get mortgages of 2 years, 5 years, whatever, you get 10 years. And that's a mix of that interest rate going forward. The swap rates have continued down. Now, the reduction in mortgage rates, even though it's quite high historically over the last 10 years, cheaper mortgages will start coming online. That'll give a boost to the housing market eventually. I'm not going to say it's happening in the next 6 months, but I mean, if you look at Taylor Wimpey, no debt, good balance sheet, pay 5% dividend.
But they're massively cyclical. Massively cyclical.
Yeah, yes, I know, but I mean, yeah, of course they are. But what I'm saying is, where are you going to put your money now? If interest rates come down, okay, if they start coming down in a while, they may do, would it be better in a house builder or in the bank?
I'm not putting him in a house builder. Absolutely, I wouldn't put him in a house builder.
No, I mean, to be honest, the chart isn't convincing there. I mean, the previous I got an alert there on 130 pence there, but I mean, I'm not in any house builders at all. But
I can say, I mean, it's obviously a good day for markets. If it's good for everybody that inflation is starting to moderate, but
it is the day. It is the day where, honestly, if you're looking at, I'm looking at companies, 3 of my companies are over 8% up today, and they're starting to move nicely, and they're off the bottoms, and they're breaking out new highs. And I think it's almost like that feeling. I had it last week. It's a feeling wave, almost like a vaccine day, Thursday before, and a lot of liquidity come in. It's almost like the guys from the Bank of England who are giving some market insiders, and they're saying, listen, there's some good figures coming out. Honestly, there's some odd liquidity that came in last week. In fact, it wasn't odd. It was off the back of the CPI in America. But we're seeing this now on the world. It with the figures getting less worse. That's all the market needs to know. And they're getting less worse. So where does that lead to in the end? The figures are getting better, eventually over time. And they're not going to as bad as they were. Anyway, top business already. Let's look at some of the winners today. OptiBiotix. Are you aware of what they do, John? OptiBiotix.
Yeah. I mean, this is an interesting story today. It's basically a sugar substitute that they're developing. It's quite an interesting market. This, I mean, I remember, but looking back, some years ago, there was a company called Pure Circle, which was built producing sweeteners from something called stevia, which was very popular. But it's a nice little story. It's developing this. We know there's sort of evidence that some of the sweeteners that we've used for years, you're sort of aspartame and sucralose are not necessarily very good for you. So there is always a quest for alternative sweeteners. They've got some decent partnerships. It's, nice little company. Share price is horrendous.
51% up today, and essentially, but if you look at
share price.
I mean, the share price up, but if you look at that, taking into context of where it's been and where it's come from, we're talking about the highs of like in 21 of 60 odd pence, and now it's down 11 pence. So it's come down a long way, but nevertheless, it's that there is quite encouraging, breaking through that 50-day moving average. We'll see if it can. I mean, you'd expect it to come back a little bit, but if it can stay above those almost like the 10 pence there, that's quite good. What else is rising today? In fact, we covered these yesterday. East Imperial, they did a convertible loan note with about 2.12 with a distributor of theirs in Macau, which is very good. Also, with convertible loan notes, it's not a good thing so much if they're held by a third party that has no involvement with the business apart from getting their money back, and that's what they do is loan you money. But that's not interested party. Yeah. Another one is MediaZest, tiny company, up 16% today, and it's risen, basically saying a little bit bullish on the updates. But
is this a new dash for trash? I mean, that is one thing I would say. You take off that inflation break, and everyone just piles into a load of old rubbish. This is what we saw before.
But that can happen though. But the thing is, it's because these companies. I mean, the dash for trash thing happens because they've been so oversold. They're ridiculous. You are seeing microcaps now, and I'm not saying they're good businesses. I'm not saying MediaZest.
Then they're not oversold.
not specifically. No, you are getting companies literally valued at cash. Some of them are loss making, but some of them are not.
Maybe that's fair. Maybe that's fair.
The market doesn't see it. Well, we can. I have valuation judgments on companies, and I'm wrong on the share price quite often. There's a couple of companies I could point out saying they need cash desperately, but they're still rallying. And it doesn't make any sense from a fundamentals perspective, but that's not what the market is saying. People are piling in. Now, certain companies, I don't want to mention them, but I say, wait till the results come out and you may see it, have a sort of slap about the face here, because there are plenty of companies rallying. But I mean, that's what you get. When companies are massively oversold, you do have that almost breakneck correction. MediaZest is one is, I mean, 500,000, but their market cap is around about, sort of, I think, less than 1 million. So that's quite significant for them, where they're making a loss. I don't know how much money they've got, but that's a rally today, But here's the one you like, John, because you're a bit of a bear. John the bear. Have you seen Watkin Jones today?
Yeah.
Now they are a leading developer and manager of residential for rent, with a focus on the build to rent, student accommodation, and affordable housing sectors. And they said in the period, there's many sales going forward, but they said they worry about the sales now. But in the period since the interim results, market conditions have become more challenging. But they're going to make a sort of underlying profit before tax around about 2 million of H1, they say, but that may go down now. And they say, but there we are. And but they've got cash. They've got net cash of around about 36 million. So not a problem, but still they've what's the ticker on those? It is
WJG.
Yeah, let's look at the WJG, and look at that. Yeah, awful downtrend. What you don't want is a downtrend and then a bad trading update. It's almost like you've been slashed 1,000 times, and then all of a sudden the big knife goes in at the end. It's like, it's awful, isn't it?
But this isn't. It's not far removed from the house building sector, is it? Really? I mean, it's just a slightly different model. It's building to sell to institutions as a rental asset, whether that be student accommodation or housing, residential housing, rather than direct sales. And it's the same pressures that are coming to bear on this business as we're being felt across the entire house building sector. Yes, we have seen this wonderful rally in house building shares today because interest rates are not going to rise perhaps as far as people worried they would. But it's the same sector, it's the same principle, it's the same pressures that they're dealing with. Yeah. So arguably, can we expect similar, tricky trading updates from other companies in the sector? I mean, Gleeson, great business, but affordable housing, it's what it does.
Well, do you know what? I jumped into Gleeson and go back out because I looked at just when I look at companies, I literally fill out the spreadsheet, I look at the fundamentals, cash, all that level, but I also look at forecasts and momentum, and they play heavily into, because you can have a company that's undervalued for a long time and there's no momentum there. But I looked at Gleeson, and even going forward, not overly ambitious metrics, and I didn't. And what I'm looking to get essentially with any company is about 100% over the next 2-3 years. Okay, and if you're microcaps, that should be attainable. And Gleeson wasn't there, and so the recovery is a bit further down than we think. And so I was seeing around a maximum of 50% over the next 2-3 years. And
that's a decent return.
It is.
That's a decent return.
No, it is, yes, but that's. I mean, there are better. Again, there are better opportunities out there, I believe, and that's why I left it alone. And I think that will change, though. Those forecasts. Now, what's going to change is either the valuation goes down further, or the forecasts get better. Or a mixture of both. So I believe there's that bigger return in there yet to come on Gleeson, but yet those figures aren't coming through. The good figures, they are still being quite pessimistic about the bill levels. Once you see a bit of a change in that, maybe, but who knows? It may be too late.
But that's exactly why I don't get massively excited when you see this huge.
Oh, I do. I think it's amazing, Mark. I think it's just changed. Honestly, this is almost like the day I've been waiting for 18 months. I honestly think it's a sea change here. The tide is generally coming in or going out, and now he's almost seen it's come up. It's almost the tide is coming up. We're almost drowning, and it's starting to go back down. Before we started drowning, it's starting to come back down there, and that's how I feel it is at the moment.
I admire your optimism. I think, maybe it's sort of just being a gloomy, pessimistic bear is it's not a great way to live one's life.
No, I can be the most negative of people, honestly, but I do feel almost I don't know what it is. Maybe it's false optimism. I just see you have to be not getting any worse. You've got to be an optimist to invest in shares, to be honest, because you take so many knocks.
Well, there's a famous book. It's Marsh and Dimpson, Triumph of the Optimist. It's now become the Credit Suisse annual returns yearbook, and it's an extraordinary, tale of why markets have delivered over the years. Through thick or thin, through war and depression. They do tend to outperform other asset classes over the long term. I was looking at gold, and it's sort of 120-year history compared to stocks. Gold has done 10,000% over 120 odd years, but stocks have done 100,000%, over that period. Stocks win the day. But as I say, they win the day at an index level, if you're in a tracker, or you buy the winners and the companies that survive, through the long term. Most companies don't survive. Most companies either get swallowed up or fail or whatever. There are not many survivors in markets over the long term, and that's why I always go for quality of ones that will last, or the ones that will get bought at a nice premium at some point.
Yeah, absolutely. But also, there's a way of buying stocks. I mean, what I try and do is I literally don't go for big exposure at the start on any company, because you can get carried away. You have confirmation bias when you do research, and you buy a stock and you think it's the best. My favorite stock is the last one I bought. Always, it's like, yes, this is going, and then something could go wrong. You could get, some news come from left field, and your sector takes a hit or whatever, and it can go wrong. So I literally try and keep my exposure at the start minimal. If it starts winning, goes in the right direction, I will average up, but in a certain way, so I know I'm backing a winner rather than a loser, and I won't sort of average down so much, especially in a bear market. You average down in that, because, like I said, you're not buying a dip, you're buying a downtrend, and that can make you skint. But most followed companies today, by the way, CleanTech Lithium, of course, that up to Jork Resource you talked about. Argo Blockchain is down 21%, and that's also the most read RNS. They raised some money at about 28% discount, pretty much, compared to the last thing. But they were.
Bitcoin's not been doing too badly of late. It's
not really. It's had a little bit of a fallback of late, right. And in the last couple of trading sessions, and I can't think. Is it? I don't know why, because you got all this sort of the ETF starting up, the Bitcoin ETFs, BlackRock and all that. So that's giving a bit of liquidity, but also maybe there's more shorting going on. But also this is Bitcoin dollar. So if the dollar's strengthening against everything else, I don't know, is that play basically? So who knows? But it hasn't got better. But
Bitcoin mining, my understanding of the problem Bitcoin miners have had is power.
Yeah.
It's a very, very power intensive thing.
And Argo Blockchain took on a bit of debt as well. They took a bit of debt. They literally, when the easy money was very good, they started really ramping up, and all of a sudden at the top of the market, they found themselves with a bit of debt, and the Bitcoin price crashed.
Yeah, I was speaking to David Lenegas, who's now behind a company called Binance, and their business is all about power arbitrage. You go to a place where you get the cheapest power to mine, and you go to a place where and you buy your mining machines as cheaply as you possibly can. But it's an arbitrage business, really. It's a power arbitrage business, Bitcoin mining, which is why they've had a bit of a tough time.
Yeah. But also saddles have a bit of debt, and
but it doesn't help when interest rates are rising.
RNS was also one of the most read is Afentra. I'm not familiar with this company too much. Azul acquisition and Senegal acquisition update. Basically, they've got a special purpose vehicle. They've acquired 12% of block 3 or 5, but they've had to suspend shares because they've their admission document and stuff. So it's not my area of expertise. I'm sure
I don't know this company. I have to admit.
You've done an article on Audioboom, so I put that in worth reading. It's taken a hit. Michael Tobin, executive chairman, bought some more shares, I believe. I just saw an RNS come out. In fact, I haven't checked it, but director, is he bought more shares?
I don't know if he's bought more shares. I had a look at the results and half-year results. I thought they were all okay. I mean, they lost a big podcast. I think it cost them about $7.5 million of revenues. A true crime podcast called Morbid, which went over to Amazon.
That worries me when one podcast can hit them like that. And I thought they need to. They may be in the process of diversifying their revenue streams, but when one podcast can take a big hit like that, then you need a few more eggs in your basket.
Yeah. No, I agree. That sort of goes back to what I was talking about yesterday, with this sort of concentration of revenue in a sort of single product or a single client or whatever it might be. But actually, you sort of look behind the numbers here, and the audience is growing. They've had some record listener numbers, advertising markets improving, and some of the initiatives they've got behind it are doing pretty well. And I've got a lot of cash in the bank, actually. So were they to need to replace something like a Morbid, they do actually have a reasonable amount of cash to go out and fund content investment. They've got some good podcasts on there.
Yeah,
cycling podcast, Trigonometry, that's a very popular one.
But the last two companies we talked about, there were two companies I missed out on 10 bags. I was held them. I'm big fans of them. Blockchain, Argo Blockchain, before the Bitcoin price went mad, and also podcasting. The podcast is huge. It's getting bigger and bigger and bigger. But of course, that attracts more competition, and the margins get thinner. But I took one, and I got bored with it, and then all of a sudden it just went mad on the rumors of it was being taken over by Spotify and all this stuff. But
one of them did get taken over, didn't it? It was Acast that got taken over by Spotify. It was. So there's probably no smoke with that fire. As I say, it's an interesting market still. I think podcasts are still incredibly popular.
It's probably a lot of consolidation needs doing. Yeah, it's probably a lot of consolidation needs doing, because there's a lot of providers out there, and you realize people like Spotify realize, in fact, there's the margins on music's even thinner. You have to pay the artists all this money, and but Stuart, by the way, last RNS was Stuart Last, CEO, has just bought about 10 grand's worth at 189. So Michael Tobin is a guy that keeps buying like crazy. He's an chief executive. He's been buying all the way down. I think, it must be feel a bit painful for him.
Well, it must do. It must do. But it is ultimately a profitable business at an adjusted EBITDA level, admittedly. But this is not zero revenue, zero growth, zero profit business. This does have a trajectory to what it calls a return to meaningful growth, quotes.
So that's what I saw around here, on this level here, about 180, and it went to like 22 quid.
My God. Buy them back then. Give you an opportunity to have a second crack.
But it's now back there. I mean, the thing is, again, if you look at momentum here, it literally hasn't touched that 200-day moving average. And if you just wait for across the 200-day moving average and a new break to a new high, then it's a good chance you get in the right place. For example, there, broken up there, you're on a new high, so £2.30, and here we're way off the 200-day moving average. So it needs to have a couple of days going sideways and a few rises before to get above that. But
I think this is a bad business at all. Not a bad business at all.
Well, they may get to this level now. I mean, what is the market cap now? It's 34 million. It's like for someone, a big player, that's nothing. That's nothing, is it? And the audience they're acquiring, and it's just a nice add-on. They're doing 135 million downloads a month. Yeah, 135 million downloads a month. There's a big traffic base behind this company. I don't know. I don't. Yeah, you've got that's a classic hype cycle share price chart, but and inevitably when companies are hyped up that much and they're pre-profit or on that sort of cusp, then nothing makes a lot of sense. No. And then people get disillusioned and nobody wants to talk about it anymore, and nobody wants to invest in it anymore, and find the next hypey rampy stock, Justin, and then go from there. Hang on a sec. I'm not a hypey rampy stock. I look at it on a fundamental level, and also I look at the chart level. But I do like micro caps and small caps more than big. I gotta say that, and I do find them more exciting and just easier to get your head round. It's almost a single story sometimes. And in fact, if you get a micro cap with many different stories, because they've added bolt-ons during there that make sense to the company, stay away from it. It should be a simple story that you can get your head around and understand.
Agreed. This is a simple story, and actually, I think there's a bit of substance here worth another little poke around.
Okay, there's a bit of rampiness. Sorry, I do apologize. I do own some stock in this company, Invinity Energy Systems, AGM statement. They say they're in line to deliver their H1 goals, 13 million for the first half. This is versus 1.4. Now, this is what you should look at. When you get companies micro caps, they should be growing top line, okay? And that is an amazing growth of top line, 9 times compared to the previous H1. And if you look at their forecast, it continues in this way, pretty much. They're looking at 25 million for this year, and in fact, 13 million, they're probably just a little bit half over that. That's a 7,700% increase on revenues last year. And they, of course, the power of numbers, you can't keep doing.
I think they'll beat those numbers.
Yeah.
I think they'll beat those numbers. Looking at the half-year figures, I'm looking at a turnover forecast of 25.6 million.
Yeah,
and they're doing 13 in the first.
Yeah, well, look at that. It continues into 2024, 52 million. That's 108%. And in 2025, even more, 120 million by 2025 forecast.
Yeah.
Because they are at now, and they are getting profitable in 24, 25.
25, probably, I'm looking at profits.
They probably need another a raise in a year's time, pretty much. But then the share price and the start of the bull market we're in now, a lot easier to raise money.
Yeah.
But, I like that. I think they are at the point, there's a lot of this going on. It's like, wind blowing and all this. People talk about this, sun shines, wind blows, where does the energy go? Exactly, you have to store it. Most of it you have to store. Most of it's wasted at the moment. And these are industrial grade, batteries that store it for as long as you want. And they last for 25 years, these batteries. And they are market leaders in this. And so they've gone past that. It's a huge, capital exhaustive business, but they've gone past that now level where they are starting to almost get break even. But it's been quite a few years of big losses. But that's the kind of money you need to invest in that kind of business, because those container batteries are not cheap to make, but they are at that inflection point. Which is,
I've been speaking to quite a few people in this little subsector recently. It's about Gore Street Energy Storage and Triple Point Energy, and batteries are interesting. They are not. As it stands, certainly the lithium-ion batteries are not a replacement for some of the sort of energy generation sources that we have at the moment. And the main problem with lithium-ion as a storage solution is that they discharge very quickly
and catch fire.
I don't think there's been too many lithium-ion fires in energy storage facilities, grid storage facilities. But
there's been a few. Honestly, if you look at Invinity's, they've obviously highlighted a few, but there's been in California, in Australia, big fires, and when they get going, they catch other lithium-ion batteries. It's like, there's a problem.
That is a risk, but it is the technology that's pretty standard across battery storage facilities at the moment. But it discharges very quickly, and the battery life. They don't last forever. These things they degrade, and so it's problematic. They can't be used as a replacement generating source. They tend to be used battery storage facilities for things like grid balancing, frequency balancing, to make sure that the grid is stable in terms of the power it produces. And it becomes more unstable the more renewables you plug into it, the more intermittent sources you plug into it. And these guys, I was having to read this morning, do something slightly different, which is called vanadium flow, which is a different type of technology. And, from what I can ascertain, this technology has significant advantages over lithium ion, not least that the batteries, so they're liquid batteries, they last forever, they discharge slowly. And therefore becoming much more cost effective than lithium ion.
I mean, they are. When I looked into it, I mean, if you look at the life of the battery, a vanadium flow battery versus lithium ion, and lithium ion start to degrade after 5 years, and so by 10 years maximum, you have to get rid of it and get a new one. Whereas these last for 25 years. But I think it's called localized cost of storage, and it's about $111 for vanadium flow, and it's about $130 for lithium. So over the life of the storage of the vanadium flow, it's more efficient.
And I think they'll get cheaper because this is got a second phase technology over lithium ion, and it's as I say, it's not as prevalent, well used across the market as it is currently. This is why you're seeing these massive growth forecasts from Invinity, because this seems to be the next phase of the technology cycle for grid batteries, and I think they're definitely in the right place. Funny enough, there's another little company I noticed this morning that's a miner that's getting in on this, which is Ironveld, which I'd not looked at before, but they're in vanadium, and making the most of it. I'm going to have a little look to see if there's anything there. But Invinity, great business.
As far as supplies of there's Bushveld Minerals as well, BMN. That's a massive hit. But just a chart there, quite like this because it's broken up from previous highs and continued there. up above 200-day moving average. But their second phase now, which will make them even more efficient and even more of a market, is called Project Mistral, and it was in conjunction with Siemens Gamesa, which is one of the big wind turbine producers. And that will be, they're starting pilots on that right now, but commercially it's going to be launched, I think it's Q1 or Q2 next year, and that will bring the cost down even further. It's a lot more impressive. So that phase, and it's starting to get orders on that already. So
seriously good company.
Yeah. Anything else on the news? Just one other thing on news, by the way. Talking about everything sort of electric. Jaguar Land Rover owner Tata has confirmed plans to build its flagship electric car battery factory in the UK in Somerset, expected to create 4,000 jobs and thousands more in the wider supply chain. Tata said it will invest £4 billion on the site. It's under the government is providing subsidies worth hundreds of millions of pounds. Good. That's what they're there for.
Well, apparently about £500 million. Let's hope the thing gets built.
There
is. I mean, call me a cynic, but is there a by-election at some point soon in Somerset?
I think Richie's going to have to. This is one rabbit out of the hat. You're going to have to do a lot more than this. I think he's going to have to pull 20 rabbits out of the hat to get a win under his belt, I think. But they say this is the most important investment in the UK automotive sector since Nissan arrived in the 1980s. The new gigafactory is 40 gigawatts. One of the largest in Europe, and will make batteries for Jaguar Land Rover vehicles like Range Rover, Defender, and Jaguar brands. The plan is to supply other car manufacturers as well, with production at the new factory due to start in 2026. So even now, if you get, it's still like a couple of years off, even that. So we should have been doing this a couple of years back, because there are factories already in Europe way ahead of us. We are way behind the curve.
Arguably, yes.
I don't understand what the politicians are doing. Help business, facilitate business. Don't get in the way of it. And that's the problem. And I think largely now we, sort of don't want to get on Brexit thing, but Brexit sort of got to win in the way of business now. I mean, even I, voted for it, thinks it wasn't a good decision for business. And regardless of where your political stance,
personally, I just think we're run by an incompetent government. Everything that's happening around us, whether that be Brexit or COVID or Ukraine. I mean, we lack strong and consistent leadership. We lack an industrial strategy. I refrain from calling it a policy. Thatcher, was behind the arrival of Japanese car makers to the UK in the 1980s. And love or loathe her, and I know many people loathe her. There was an idea behind how she approached the economy and business. And where we should be, focusing our specialisms, and that's why it's like, instead of trying to build UK car makers, in the 80s, I think she'd realised that we were behind the curve, and that the real innovation in car making came from Japan. So invite them here. And I think the same is now true of batteries. We look what happened with British Volt, an absolute disaster. Absolute disaster.
Elon Musk over a couple of years back and said, right, any innovators like that, get them over, get them building in your country.
Get them building in your country. Don't try and do this homegrown nonsense, because it would just John
for Prime Minister.
No thanks.
Just quick look at the indices, all up there, pretty much rises as you see, Persimmon, Hargreaves Lansdown, Land Securities. It's all pretty much property and Hargreaves are there, and what are the fallers in the FTSE? Pretty much miners there. Centrica. In fact, Centrica's quite interesting. Look at the price of gas. And I was saying on Twitter, I said, I hope someone's storing this gas, because it's like, in fact, let me just get the gas price up before we finish. Because if you look at it, commodities, nat gas, look at the price of this now. We have another capacity. Centrica have the rough storage, which now that 12-day storage, apparently. In Europe, they can do like 100-day storage. France 100 days. We're at 12 days. Now, are we not? We shouldn't be buying it up here. We should be selling it here and buying it here. So I don't know who's doing this, but we need to be storing now big time at these prices.
Yeah, it's a disgrace that we don't have gas storage. We used to have significantly more gas storage.
Again, government.
I do think it is. Although there are some sort of private, companies that, publicly owned companies that have underinvested in storage facilities. But if you're going to spend billions of pounds, and gas is so important to the economy, we'll build some gas storage with it. Have a national strategic reserve. 12 days gas storage is not enough, and we're going to see spiking prices again in winter.
Yeah. Well, have a national strategy.
A failure of government energy policy here. And in fact, I think energy and business policy will sort of tied up in the same department now anyway. It's about time we had someone with some sense looking after business and energy in this country.
Marvelous
Who
stuff.
is it? It's Grant Shapps, isn't it? Is it Grant Shapps?
Anyway, that's it for taking stock. Run a bit over today, but listen, we run over today because it's the start of a bull market. Okay, mark that in your diaries. 19th of July, 2023. I say it's the start. Be sensible, but I think figures will get less worse from here. John's more cautiously optimistic there. But
yeah.
Big